Hey, Dan Passarelli here. Well, it's been a busy day in the market today. Market was up for a good part of the day and then pulled back. Seemed like it could have really taken off to the downside, but ended up picking up some bids and closing just a smidge down on the day, 0.8% on the day. But one thing we did see is we saw some pretty big trades in Apple. Specifically, there were some directional butterflies, which I think were pretty interesting. Take a look here. So this is one of the butterflies that traded. There were some at other strikes as well, but this was a 3,000 lot, right? And so for those of you who are familiar with butterflies, this is a put butterfly where someone bought 3,000 of the regular March 110 puts, sold 6,000 of the regular March 125 puts, and then bought 3,000 of the March 135 puts. Now, this specifically is a broken wing butterfly because there's $15 range on the bottom side and only a $10 range on the top side. We'll talk about that a little bit more in a minute. This ends up being a pretty cheap, it's still a 3,000 contract trade, so not that cheap, but on a per contract basis, a pretty cheap directional bet. So let's take a look, and in fact, let's model it out for ourselves. We'll just model it out a little bit smaller here. So here's what somebody did. They bought the 110 puts and then sold 2 of the 125 puts, and then bought the 135 puts. Now I'm just modeling this out as a 10 lot broken wing butterfly, but we're doing the same strikes and the same ratio. I just want to give you an idea of what the picture of this might look like if someone were to trade this. So this is a rather interesting trade, right? In Apple right now, that stock closed right around 150.87. So that puts it right around here where this dotted line is. So look, if the stock goes up or stays where it is or doesn't change very much, the most this trader is going to lose is, just a smidge. I've got a 10 lot contract on, and it looks like, let's see here. I guess you could lose 43 cents per contract. So if that's $43 per contract, if we're looking at a 3,000 lots, so that's 3,000 times 43 bucks. Holy cow. Whew. This trader could lose $129,000 if the stock stays where it is, goes up, or even goes down just to 135 bucks. Now, if we end up somewhere in this range, this trader stands to make a great deal of money. Instead of this being, 43 bucks, this ends up being about 950 bucks per contract, right? So 950 times 3,000, that comes out to about $2.8 million. Now that's the absolute best case scenario, which would be this trader's dream, of course, but really we're kind of more somewhere in here. So we're still looking at probably about a good $1 million between this range here, maybe somewhere between about 120 and 132 or something like that. Trader stands to make a pretty good deal of money. Only if it ends up really overshooting to the downside, falling below 110, does this trader stand to endure some really, really significant risk. So it's a pretty interesting trade, looking like a bit of a drift down in Apple. Now, why might this trader be thinking that? Well, look, Apple did hit some pretty solid resistance at about $155 a share. And if the market and Apple as well decides to take a bit of a route, remember the sweet spot for this is about 125 bucks. If it breaks through the 200-day moving average, it's very likely that we would see a little bit of follow through there. And then if we break down yet further through the 50-day moving average, I think this area here of the 125 resistance area, which is the price target, is a pretty reasonable target if we get that strong momentum beginning to the downside in the short term. Again, the expiration for that was the regular March. That's the third Friday in March, and we're going to be keeping an eye on this one. I hope that helps. This is Dan Passarelli, Trade Smart.